Hello, welcome to the weekly technical analysis review for Tuesday, December the 18th. I'm Rafa Bajan, currency analyst at XM.com. The pairs we're going to look at for this week are the euro dollar, the pound yen, and the Aussie dollar. We're going to start first with euro dollar. We can see there is some positive momentum at the moment. Stochastics are pointing outwards, and there's been a gradual recovery in the MACD, though the histogram remains in negative territory. There is strong resistance coming at the moment from the 23.6% Fibonacci retracement of the upleg from 1.1215 to 1.1442. So that's around 1.1388. And it also coincides with the 50-day moving average. So a successful break above that area would help shift the near-term bias to a bullish one, and then prices might be able to target the December top of 1.1442. Above that, the 1.15 handle would come into focus. If it manages to break above the 1.15 level, it would help turn the current neutral to bearish outlook in the medium term to a more neutral positive one. To the downside, there is immediate support from the 50% Fibonacci at 1.1328. A drop below that level would bring into focus the 78.6% Fibonacci at 1.1263. So that's been an important support area in the past. If breached, it would take prices back towards that 16 and a half months low 1.1215 we saw back in November. Let's now turn to pound yen, which is looking fairly bearish in the short-term. RSI is slightly pointing downwards below the 50 neutral level. There is the immediate closest support is that 3.5 months low 141.16 from the end of November. Breaking below that level would take pound yen towards the 138.2% Fibonacci extension of the upleg from 142.76 to 149.48. So drop below the 138.2% extension at 140.20 would take prices first. So that's also actually close to the 1-year low of 139.88 from back in August. So dropping below that low would turn the medium-term picture to a more bearish one, and then the next key support below that would be the 161.8% Fibonacci extension at 138.61. To the upside, there is likely to be immediate nearby resistance at the 142.76 level, which was the swing low from back in October. Then we've got the 20-day moving average around 143.85, and not too far above that is the 78.6% Fibonacci retracement at 144.20, and then above that is the 61.8% Fibonacci retracement at 145.33. So pound yen would really need to break above that strong resistance of the 61.8% Fibonacci, which also coincides with the 50-day moving average, in order to help shift the focus back to the upside. And our final pair for today is the Aussie dollar. It's looking neutral to bearish at the moment for the pair. RSI is flatlining just below the 50 neutral level. So there's been a significant deterioration in the short-term picture following that downside correction from the 4-month high of 0.7393, and that took the MACD to a negative territory. At the moment, there is strong resistance coming from between the 50-day moving average around 0.7192 and the 50% Fibonacci retracement of the upleg from 0.7020 to 0.7393. So that's around 0.7206. So clearing that resistance area would help take the pair towards the 0.7250 level. That's the 38.2% Fibonacci retracement. And then above that, the 0.73 handle would come into focus, which is near the 23.6% Fibonacci retracement. To the downside, we are seeing strong support from the 61.8% Fibonacci at 0.7163, and then a breach of that level would take the pair towards the 0.71 handle. That's the 78.2% 8.6% Fibonacci retracement, and falling even further below that, we would then see that important support area between 0.7040 and 0.7020 coming into focus, and of course 0.7020 was a 33-month low all the way back in October. Having a look at the medium-term picture, it's still looking fairly neutral at the moment. We would need to see prices successfully break above that 4-month high of 0.7393 to shift it to a bullish outlook in the medium term. That's it from me. Thank you very much for watching and have a great day.